Hello guys, welcome back into another educative video guys. So if you are new to this channel, make sure you like and subscribe, because in this channel we discuss about finances and how you can scale up guys. So now in today's video we're going to be talking about real estate part of stocks, so which makes you richer. So that's the topic for today. So now let's go to the next page now. So it's one of the most common financial debates of our time. Should you invest in real estate or stocks? If your goal is to build a long-term wealth, while both can make you rich, the path to wealth is different, and your personal goals, risk appetite, and timeline plays a huge role in determining which one might work best for you. So now let's explore the difference in returns, risk control, and how each option helps you actually build wealth over time. So now the first one I want to talk about is return on investment guys. So now historically on stock market has returned an average of 8 to 10% annually over the long term, which reinvestments dividends, especially with index funds like S&P 500. On the other hand, the real estate can produce return in the 10 to 15% range when you combine rental income, tax advantage, and properties appreciations. However, real estate often involves leverage, so using a mortgage to control a more valuable asset with less upfront capital, which can amplify both your gains and your loss. So with stock, you are often investing your own money without leverage, unless you are doing risky margin trading. So while both offer solid ROI, real estate can sometimes outperform in managed wealth and timed right. So that's for number one. So now the number two here I have on my list is cash flow and passive income guys. So real estate is a favorite for investors for who wants monthly income. So rental properties generate predictable cash flow once they are occupied, and over time that cash flows tend to increase with inflation. Stocks on the other hand don't pay you monthly unless you specifically invest in dividend paying stock or ETFs. So even then, payouts are usually quarterly and typically offers lower yield than real estate, unless you hold high dividend stocks or large capital. So if you are looking for consistent passive income that could cover your lifestyle, real estate as a hedge. So now the third one I have here on my list is liquidity and flexibility. So when it comes to liquidity, stocks win hands down. You can buy or sell stocks within seconds at the click of a button. Real estate, however, is slow and illiquid, so it can take weeks or months to sell a property, not to mention dealing with agent inspections and closing costs. In an emergency or fast moving market, stock gives you way more flexibility. Real estate is better for people who want a long term play and don't mind tying up their money for years. So let's go to the next one now. So the next one I have here is risk factor. So stocks are more volatile in the short term, so markets can swing widely due to news, interest rates, or global events. However, if you diversified and investing for a long term, the risk smooths out significantly. So real estate seems more stable, but it's not without risk. So property markets can crash, tenants can stop paying, repairs can eat into profits, and interest rates high can ruin your cash flow. So both investments carry risks, but they come from different angles. Stocks are emotional and fast moving, while real estate risks tend to be more operational and long term. So the last one I have here on my list is control over your investment. So in real estate, you control almost everything: the location, the upgrades, the rent, the tenant, the exit strategy. So this level of control allows savvy investors to force appreciation and optimize returns through effort and smart decision making. So in stocks, you own a tiny slice of a company, but have virtually no control over how it runs. So you are betting on management to deliver results. So if you are someone who likes to be hands-on, real estate may suit you better, and if you prefer to set it and forget it, stocks offer a more passive route. So at the end of this video, I know you should be able to decide on your investment now. So I hope to see you next time, and thanks for watching.